Good morning, traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for March 27th, 2025. Well, I hope everyone had a good rest last night. It looks like we have more news this morning that creating a little bit of consternation around the world with 25% tariffs adding on to foreign autos that will go into effect on April 2nd. So we've had a little bit of tossing about here. Futures were down here in the U.S., but this morning they have pushed back up as if it doesn't really matter. We'll see if that matters once the market opens or not. But before we get into that, let's take a look at what happened overnight. Well, first off, if we take a look at Asian markets kind of mixed. We had Australia lower and the Nikkei fell by 227 points. India was a little bit higher by 105 points, while South Korea was lower. Hong Kong managed a $95 increase, and Shanghai was up $5. If we take a look at European markets this morning, this is where these tariffs are going to be the hardest hitting, is in Europe. We've got a DAX down 167 points. We've got FTSE down 48 points, and we've got the CAC down 27 points. So we'll have to keep a close eye on those today. And then if we look at U.S. futures here this morning, well, we've got those futures trying to hang in there in the positive. Right now, NASDAQ futures are just slightly lower by 8 points. We've got S&P 500 futures are up by 4 points, and the Dow futures are pumping in there 90 points higher this morning, trying to shake this off as if it wasn't happening. If we take a look at bonds this morning, well, our bonds are having some reaction as well. We've got a little bit of mix in there. The 2-year bonds haven't really responded all that much. They're at 4.03%. But those 30-year bonds have definitely responded. 30-year bonds are now at 4.74%, and the 10-year bonds are at 4.39%. So we do have some issues or concerns there. And then when we look to precious metals, well, those precious metals are really showing a bit of a worry or concern here with some of these changes. Right now, gold futures are up $38.80 an ounce at $3,091 an ounce on gold. So big push right there. Silver is up substantially. Let's look at gold here this morning. A beautiful bullish pattern there on gold. So our GLD and PHYS would be another place to be looking. Beautiful bullish patterns there in that on this news. And silver also breaking higher this morning. Pretty substantial move here in the pre-market right now. Silver futures are up $53 an ounce at $34.75. So watch for potential breakouts here in silver, and record highs in gold here today, continuing to show that push to the upside. Now, interestingly enough, we have copper moving lower here this morning as a result, but COPX, it's kind of interesting, must have something to do specifically with the stock here, COPX, because we're only down 0.8 cents right now in copper. We've got platinum and palladium all higher here this morning as well, reacting bullishly to that move. Now, if we take a look at oil prices are moving a little bit lower here this morning. If we take a look at XLE, our oil producers, they have been doing one heck of a job pushing to the upside here on those producers, while oil has been edging its way back up. We'll have to keep an eye here as we break through this major resistance here in XLE. If that can hold up in here, then there may be some more upside in those oil stocks. But right now we've got oil futures down 20 cents a barrel. That's at $69.45 a barrel. Brent crude pulling back slightly as well at $73.62 a barrel. And we're continuing to see natural gas pushing lower here this morning, even gapping lower here this morning on some of this news. So coming into that upside trend, we'll see if it can grab onto some price support in this area. We'll want to be watching that. But right now, that head and shoulders top in play there on natural gas. Looking at cryptos here this morning, well, when we take a look at those, Bitcoin had a rough day yesterday, but it's bouncing up a bit here this morning, up $725 a coin this morning, and Ether pushing up as well. Let's see, right now $26 a coin here this morning. We do have a little bit of mix in some of those cryptos here today, so keep an eye on those as well. A lot of things moving around here in the market as the market is trying to price in and figure out where all this is going to go. Whether you agree with it or not doesn't really matter. What matters is how the market kind of decides to deal with this and how to price it. And right now, U.S. futures are trying to shrug it off and say, doesn't really matter that much. We'll see if that holds throughout the day. However, let's take a look at, well, I guess that's it. How about we settle in and buckle up? And let's get ready for the Thursday edition of the Morning Market Prep video. Good morning once again, everyone, and thanks so much for being here. I very much appreciate it. Let's dive into these index charts, see if we can figure out how we might want to approach the market for today. Remember, the important thing is to look at these charts without a bias. Try to take all of that news and all of those things out of consideration here. Let's really look at the charts for what they are, not for what we want them to be. That can help you a lot in your trading. Let's take a look in here. We've got the diamond sitting here right on a price support, trying to hang in there. As you can see, our bearish candle in here on Friday, we tried to pop up. We were up over 200 points, and then those sellers came in, and I warned yesterday about that breadth situation in the market and to watch for whipsaws. If we can hold this area of price support, we're in pretty good shape. Might be slipping into more of a consolidation here in the Dow. If the bulls can push this on through, well, right up here we can see it pretty easily, that resistance area that we need to take out to really engage those bulls. And then after that, I think we're kind of up in this area to see whether we can push through that, and then we would be pushing right on up to this next area of price resistance in the chart. Now, if the bears were to have anything to say here today, and I think there's every reason to believe that they could, well, pretty easy to see if we were to break back down below this area here. That's going to be a concern because we still have this big gap, and that's one of the problems with the market right now. Is it's so emotional. It's when it comes to buying, it's everybody racing in and chasing and all of that kind of stuff. And we're leaving these giant gaps behind, and that creates this danger. And so if the bears have anything to say, well, we could fall into that gap. And we're looking at some pretty big point moves to pull back and fill that gap. That would bring us back to this upside trend. And if that's the worst that happens, probably no big deal if we pull back into that trend. If we can hold in that area, it would be if we break that area and we start pushing down beyond that, that's where there's probably going to be a little bit of concern about that potential of a retest of some of these market lows. Now, if we take a look at our moving averages in here, you can see we're back above our 200-day. So that failure that I'm talking about, if we drop back below here, would be a retest of the 200, which wouldn't be a problem. What would be a problem is if we were to fail that 200-day moving average. If we take a look at our SPY, rough day yesterday. Evening star type pattern here, pulled back solidly on the day. Qs were leading this move yesterday to the downside. We did break down below this support, but you can see this morning we're trying to hang in there and hold on to that support. If the bulls can find some inspiration here, well, let's start looking right up in here at these areas of the chart that we could test, and then of course right back up through that downtrend resistance in the chart is what I'd be looking at. Just kind of breaking through those candle levels, seeing if we can push on through, and then right on up in the SPY. If the bears, however, happen to find some inspiration in here, then that push down in here could push us right into this area of price support and upside trend, and closing the gap here on the Qs. Now, if that happens, and that's all that happens, we're in good shape. It's if we break down below there, I think we're going to raise some real worry and concern in the market. Once again, looking at our moving averages, this is a failure of the 200-day moving average, so we'll have to watch that pretty carefully here if there's follow through to the downside. Our QQQ, very much the same, very bearish look at the end of the day yesterday, pulling back, coming back down into this area of price support, which isn't a terrible thing if we can hold here. If we can hold here and bounce off of this, well, I'm going to be looking in areas right up here, and then of course right through those candles right there for those areas of resistance, and then right back up here to retest resistance in the chart up here. If those bears, however, find inspiration today, then I'm going to be looking at that push down into this area of price support and this little upside, shallow upside trend to see if that can hold. And once again, no problem if we pull back to there and hold. The problem would be if we break on down from here, raising that concerns of retest of lows, possibly even new lows that could come in the indexes. If we take a look here, again, a failure at that 50-day moving average. And I've been reminding everyone that these short-term moving averages or shorter-term moving averages have been coming down quickly. And you can see we've got that 34 EMA about ready to cross down through the 200. That's adding that additional weight here to that 200, and it may be a little bit difficult to push up through there unless we can get some clarity on how to price this market with these things going on. And then if we take a look at our Russell IWM, also pretty rough day yesterday, pulling back, didn't quite fill the gap but came really close to filling the gap, ended up holding right here on this price support. If the bulls can follow through to the upside here today, well, I'm going to look right up in there, and then of course start progressing up through right back up here to this big area price resistance that runs all the way back to 2021 and 2022. If those bears, however, have anything to say, it's not that hard to see that possibility that we could break that little upside trend here and start coming back testing some more of these support levels in the chart, and that possible even reversal back down to retest that 500-day moving average as support. So watch that closely. If we take a look at our VIX here in the market, our VIX had a little bit of increase in worry yesterday, but not so much as to really damage anything. As you can see, just bouncing up in here, a little bit of worry, but we may get a little bit more of that worry here this morning if we respond negatively to these tariffs and, of course, the economic data that we have coming. That certainly is market moving. So watch that carefully. Pushing up, we hit that resistance there in the chart and backed away from it. If we continue to see bearishness in the market, I would look for a break of this and maybe even a push right up into this area of the chart. Beyond that, it gets a little bit more worrisome if we're back up here above 20 handles in the market. If the bulls can find inspiration here and hold this area of resistance, then we may well just roll over here, continue that push to the downside, establishing that downside trend in the VIX and maybe coming back into this area of price support. If we take a look at our T20s, well, our T21, let's go to T2122. If we take a look at our T20s in here, our T2122 had more stocks selling than going up yesterday, obviously with the pullback that we saw in tech, and having a little bit of uncertainty showing up here. But at the end of the day, it really wasn't panic ridden at all. It was pretty controlled on that selling. So we're just below 50%, which means we have about an equal opportunity here for the bulls and bears. If the bulls can find inspiration on this day, pushing up, well, we've got about an equal amount of space for the bulls to go or the bears to go. So we're kind of straddling the fence here. I don't know if these tariffs are going to kind of push us toward the bearish side or if we're going to shake it off and go toward the bullish side, but we'll have to watch that pretty closely. If we take a look at our T2108 or T2108 yesterday, just a little bit of flat, no major changes here. So as we pulled back yesterday, it was very, very controlled. It wasn't panic laden at all. So watch that in here. We're holding on to this area of price support just barely. But if those bulls can find that inspiration to continue that push here to the upside, we might start breaking through some of these areas of resistance in the chart and moving on up. If those bears, however, get some inspiration here in some of that economic data, well, there's every reason to believe we could start pushing back down and kind of testing lower here in the market. So watch that carefully. Our T2107, our T2107 chart is very much the same. Pretty flat here on the day, just a tiny little bit lower, but you can see held support, no panic in here. If the bulls get going, we can see the resistance levels up here for progressing higher. We can certainly see the support areas here if those bears have anything to say on the day. So T2101 is still where my concern is. As we sold off yesterday, we didn't see any improvement in breadth there. As a matter of fact, the breadth was declining when we were up 200 points yesterday in the Dow. So as I continue to mention, unless we can get breadth following this market, we still have that major concern and big opportunity for whipsaws. So be paying close attention to that. If you're a bull, what you don't want to see is you don't want to see, if we really start moving to the downside again, that breadth picks up on the bearish wave, because so far we haven't been able to find breadth on the bullish move to the upside. So bit of concern going on there in T2101, so be really, really careful here. I got to tell you, and I don't normally do this kind of thing in this video, but one of the things that I've been finding pretty effective is to utilize out of the money credit spreads, out of the money ratio spreads, so I can deal with this volatility and put some space between me and current price, and it's giving me the ability to bring in some nice capital. So for example, I closed a bullish put spread yesterday on IWM. Overall on the trade, really nice profit, 61% closed, 62% like that, closed out of it yesterday in profit, and then added on a diamonds ratio spread trade for the bearish side, and that was up nicely by the end of the day. So continuing to watch some of those patterns in the market, you may want to consider a little bit more of some volatility trades to kind of stay away from price a little bit and deal with these whipsaws and volatility. Let's take a look at our economic calendar here for today, and obviously we've got some data to be thinking about here today that could move us around quite a bit. First off, we're going to get a GDP number here this morning. They are expecting GDP to move up to 2.4 here in the consensus. So if we come in strong on GDP and hold personal consumption expenditures where they are, well, we're in great shape. No worries. I would expect the bulls to be pretty happy about that, and we could rally. If, however, these happen to miss, and I do think there's a possibility when we see some of those spending numbers that we've been seeing, that we could miss here on GDP. So watch that carefully here today. I see the potential of some volatility around it. International trading goods, we largely ignore this number. We shouldn't. This is a bad situation here where our trade balance is so out of whack, and I know that's why these tariffs are going into play, to try and help balance some of that, but it is a bad situation here. Consensus is looking for $135.5 billion in the negative here on that trade balance. Now that is an improvement over the 153 of the last read, so watch that closely. I would expect import and export prices, import-export numbers to be affected, and you can see they didn't give us any consensus here on those. If we take a look, we've got jobless claims then to be paying attention to. Jobless claims, they're looking for 225,000. If it comes in somewhere around there, I don't see that being a major problem at all, but watch that closely. Remember, after that, we've got a corporate profits number. We're going to get retail inventories, wholesale inventories, the pending home sales. They're expecting pending home sales to improve from a negative 4.6 to 2.9%, so watch that one. A natural gas report, and then we're into the bond auctions, Fed balance sheet, and some more Fed speak after the bell today. And as we think about that, we get through this here this morning, a lot of folks are going to be wondering what is going to happen here on our personal incomes and outlays number. This is the Fed's favorite, the core PCE number, coming in here on Friday, and with that concern of recession, with that concern of inflation increasing due to tariffs, we'll have to watch that pretty closely. Could be another reason for the market to kind of stall out in the afternoon and get really choppy as we wait. We've got a consumer sentiment number. Obviously our consumer confidence number was not good, so watch that one closely, and some Fed speak here with the Baker Hughes rig count going in there on Friday. Let's take a look at our earnings calendar here for today. And our earnings calendar, well, we don't have a whole lot to get too excited about here today. Notables here this morning, you can grab a quick screenshot of that. I don't suspect these are going to be something that's going to move the market beyond what we see in these tariffs and, of course, the economic data that we've got coming this morning. But let's take a quick look at these here today. SNX So far, not much movement on earnings, just kind of hanging in there. And WGO trying to get a little bit higher. We got the Winnebago trying to get something going there to the upside, but boy, this has been in quite a downtrend here. This really doesn't change that chart at all. If we take a look at the afternoon reports, we've got AIR that will be reporting, AGX will be in there, BRZE will be in there, and then we're going to hear from Lulu, and we're going to hear from OXM. Those are your notables for this afternoon. So not exactly those kind of things that are going to just make the market rip to the upside. The other thing that we have to be thinking about, guys, is we're coming into the end of this quarter. There could be some window dressing on the end of the quarter to be watching for. That adds to some volatility. And then, of course, the blackout period. We're moving into that blackout period for the next quarter of earnings. That typically runs a little bit, brings some difficulty to the breadth of the market, and we'll want to be watching for the potential of a choppy, wide-ranging consolidation, which is not abnormal. It's a pretty normal thing to see as we go into that blackout period. So you can see right in here, as we go into some of those blackout periods in the market, we get these wide-ranging, choppy consolidations that can last much longer than you would expect. So be prepared for that possibility as well. Let's take a look at a few stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube. Also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, click that thumbs up, leave a brief comment. That helps the channel to continue to grow. So keep an eye on those. Boy, one of the things that I noticed yesterday, and a lot of these are not in buy points, but we saw a serious move yesterday into and a lot of bouncing back up in defensive sector stocks, old boring defensive sector stocks. Again, they may not be in a particular buy point, but there were a lot of them. KHC making a move to the upside yesterday. Coke, Pepsi was moving up. Monster, which is a beautiful upside chart right at the moment. Altria turned around and went right back up yesterday. We saw Campbell Soup moving to the upside. We saw things like gold holding in there, and particularly the miners. Take a look at some of the miners out there, very bullish charts in some of the miners to be paying attention to. A lot of those are showing some good, strong bullishness. GDX, GDXJ. Take a look at let's get Newmont in here. So a lot of those showing bullishness. We even saw some discount retail moving up. Dollar General making some moves yesterday, trying to move up. Mickey D's, which is more in that defensive consumer cyclical sector. Mickey D's was showing signs of improvement. Kroger looking good. So you might want to take a look at that defensive sector area of the market. If the market does get a little bit spooked and worried, you can see a rotation could go into these, looking for that bit of safety, those dividend payers, things like that. I am extremely happy with my AT&T. AT&T continuing to move to the upside. I've got a whopper of a profit in this already, and continuing. Whoops, that's a 7-day. How did that happen? Continuing to extend sharply here to the upside on that weekly pattern, looking beautiful overall. You can take a look at Verizon setting up in a nice bullish pattern, looking to move to the upside. Philip Morris is looking good in there. So look to some of those staples. Carry Dr. Pepper starting to make some moves. Look to some of those staples, look to some of those old boring stocks for a little bit of safety to the upside. And then, of course, take a look at some of those gold miners, safety plays in the market if we continue to see this uncertainty on these tariffs and a concern of recession. So watch that closely. Mondelez making a nice move. Constellation Brands making a bullish pattern show up here. So watch those carefully. So with that, everyone, hey, I want to wish you all a fantastic day. I want to wish you great results in your trading. Thanks so much for being here and listening today. Expect some volatility when these numbers come out. Anything is possible, so plan your risk carefully. I want to wish you all the best. Be careful, be safe. See you back here bright and early Friday morning. Take care, everyone.